In today's video, we're going to talk about the pros and cons of getting an income annuity. Do you even need to get one? Will your plan work without one? Either way, let's talk about it. Hey, this is Mel Stubbs. I'm a financial planner here at Christy Capital Management. And here on this channel, we're trying to bring clarity to the confusion around retirement planning. So what's the deal with income annuities? What are they? And what problem do they solve? So an income annuity is when you put money into an annuity and you are giving up that money in exchange for a payment for the rest of your life. The insurance company is giving you a guarantee to pay this monthly amount for as long as you live. Now, depending on the exact annuity you get, there are different survivor benefit elections. For you to get the highest possible payment, generally, whenever you die, the money is over and your beneficiary doesn't get anything. If you accept a lesser payment, then there will be some money left over for your beneficiary. Now, this is the part that really gets murky because depending on when you die and how much remains in the balance, well, that'll determine how much your spouse or your beneficiary may get. And that's one of the dilemmas with income annuities, and that's where most of the confusion lies. How much is left over for your beneficiary? So what problem does an income annuity solve? Well, the fancy term for this is called longevity risk, or the risk of outliving your money. You live so long that your money runs out. Well, an income annuity is set up to not run out. As long as you're living, you'll continue to get that check. Now, are there some downsides to an income annuity? Well, most of these annuities do not have inflation protection built in. So when you set one up to receive $1,000 a month, let's say, 20 years from now, you'll still be getting $1,000 a month. At least at the filming of this video, inflation is very high, and you can see that $1,000 20 years later is not going to spend the same as $1,000 does right now. Getting an income annuity locks you into that payment. So where does this fit into your planning? If you want to guarantee a certain portion of your income, then maybe an income annuity could be right for you. Now, for most people, you're going to have Social Security, which is in and of itself a guaranteed annuity. And if you're married, you're going to have a spouse that gets Social Security as well. Now, I know there's some CSRS retirees with the federal government that don't get Social Security, or they get a really reduced amount, but for most people, you'll be getting something from Social Security. Now, both of these guaranteed payments do have cost of livings built into them. But if you want to have more guaranteed income than just the Social Security amounts, then you may want to get an income annuity. Now, for a lot of people that are watching this, you're a federal employee or a federal retiree. And so that means you're going to have a guaranteed pension check. So let's say you're married and you have a FERS pension and you have your Social Security and you have your spouse's Social Security. Do you need a fourth guaranteed check? Possibly not. The guaranteed annuity is good when someone needs to have a guaranteed portion of their income so that no matter what, that money's coming in. And for federal retirees who have a pension check plus Social Security, plus potentially a spousal Social Security, you may not need to have another guaranteed check. Most of the time, these products are meant for people that don't have a pension. So then the question is can you take out a similar monthly payment and not get a guaranteed annuity? Probably. If you invest your money appropriately, you should be able to take out between 4 and 5% of the money every year and not have it run out. Notice I said you should be able to. It won't be guaranteed. If you withdraw 4% of your money every year, your money will last 25 years even if you don't earn a dime. If you can earn 4% on your investments, then you're just taking out the 4% that you earned and your nest egg remains the same the entire time. Nowadays, a lot of professionals are moving the 4% withdrawal rate up to 5%, saying that withdrawing that much should allow your money to last forever as well. Now, do pay attention to the word I just used, should. It's not guaranteed. That's a big difference with an income annuity. If the stock market performs like it has historically, performed over the long term, you should be able to make the same withdrawals without an income annuity and without locking your money into that agreement. If you choose to take the withdrawals on your own, then you still have control of the balance. If life throws you a curveball and you need to dip into the balance, you still can do that. With an income annuity, you cannot do that because you've traded that money, that lump sum, for the monthly payment. So you can't dip into the balance anymore. If you choose to do the 4% or the 5% withdrawal, and the stock market performs like it has historically done over the long haul, then the account should still be growing, and each year you should be able to take out a little bit more. Now, you're not locked into this payment. Please pay attention again that I did say you should be able to. The biggest difference is the guarantee guarantees that you can do this. When you choose not to get the annuity, then you should be able to if your investments are set up appropriately. Now, one thing you want to keep in mind if you want to get an income annuity is that since you cannot access the balance, you still need to have some other money that is liquid that you can access if you need to. You can't take all of your money and lock it up in an income annuity and then have life throw you a curveball and you have no liquid money. That would not be good planning. So if you're thinking about getting an income annuity, first determine, do you need the guaranteed income or do you already have some guaranteed income? Let's say that it turns out that you do need some guaranteed income. Now figure out how much of it has to be guaranteed. Once you do that, you want to figure out how much liquid money you need that you don't want to be included in that annuity. And then when you're actually finalizing the annuity, make sure you ask specific questions on what happens to the rest of the money if you die early. That's where annuities can get kind of confusing, or people get confused about where the money's going. All annuities are different and have different features, so please pay attention when you're completing that paperwork. If you need help figuring out whether you even need an annuity at all, please reach out to christycapital.com or call the number on your screen. We love to help bring people peace in their retirement so that they can feel confident about retiring. Income annuities are something that you can't afford to mess up. There are no do-overs. There are steep penalties for canceling an income annuity if you decide you don't want it after all. So make sure you talk with someone that can help explain the fine print. Now, some people do need a guaranteed monthly payment, and this is a great way to solve that problem. Other people don't need it, but there are still companies out there trying to sell you one. This solves a specific problem. If you don't have that problem, then you don't need this solution. We can give you honest feedback on what your planning needs are. We are a fiduciary, so we're only recommending things that are in your best interest. Please go to our website. I'd love to talk with you. Thanks for watching. I'm Mel Stubbs. We need to do the proper disclaimers. The purpose of this video is not to give specific tax advice or investment advice. We're going over general principles and ideas that can be used, and if used correctly, can save and avoid taxes. You're going to want to work with someone personally who knows your situation personally. So seek out advice from an independent financial advisor. This is for educational purposes only. I hope you enjoyed the video.